Hi, it's been a minute since the last Crypto Daily video. Not gonna lie, the past few weeks in the crypto markets probably hasn't been great for many, but for me at least, it's been very good. I want to explain exactly how it's been good, how I'm hoping it'll still continue to be good. Every single day, all day was research, calls, rebalancing my portfolio, more research. My eyes bled. So today I want to do a rapid fire video on a whole bunch of topics. There's a lot we need to discuss. Everything has flipped upside down almost. Old rules have been tossed out and there's a bunch of new ones we've had to learn. So we need to talk about Bitcoin, Ethereum, DeFi, CeDeFi, how I'm making money from ridiculous narratives, Polkadot, and of course, cats. But first, let's talk about Bitcoin.
Can you characterize everything that the Fed has done this past week as essentially flooding the system with money?
Yes, exactly.
And there's no end to your ability to do that?
There is no end to our ability to do that.
Never been more important in our entire history. That is a growing trend ever since Bitcoin was released till now. You want to hedge against the unpredictability and insanity that is the global economy, that is the world. Well, in my opinion, the best is, of course, fiat. The best hedge in the world is definitely, but how's it doing versus everyone's number one key metric of success, the price? Bitcoin saw a steep rejection. Bitcoin plunges as US government officials pursue BitMEX owners. Within hours, Bitcoin declined from above $10,900 to $10,600, leading the DeFi market and Ethereum to correct. Whoa, holy crap. Did I miss something? In less sensationalist terms, it's been Chop City for a couple of months now, between 10 and 11K. Which one of those is more likely to give way first? You know what? I don't even really want to look into it. I mean, what's the point? If Arthur becoming a at-large fugitive like that, if Donald Trump and another guy, I'm not American, Biden, have a silly argument and to the markets, or Donald Trump contracts corona, and like these things aren't really predictable. You could say, sure, something's coming, but you don't know when. It's very sudden and then it's over. Like, you know what I mean?
No. Well, yes.
If gold shoots and Bitcoin goes down, I'm at a complete loss at the stupidity of it all. You see, I've been trying to tell you what the world's number one. What is the world's? Can I try that again? You see, I've been trying to tell you all what is the world's number one store of value. Well, it's obviously Bitcoin. I think there's something wrong with the teleprompter. In terms of what else are you going to trade? What other narrative are you going to use to trade your Bitcoin? The global economy, why not? But fundamentally speaking, gold rallying and Bitcoin crashing, really? Are you serious? If we were to look at indicators, my favorite are, and always have been, or at least for a long time now, futures funding, hash ribbons, and the tether supply. I'll cut right to the point. Those three things are looking really good. For example, let's check out Tether. So the entire year is basically looking like steps. The last 3 months, we've gone from 10 billion Tether in supply to now 15.5 billion, more than a 50% jump within 3 months. This can be considered a bullish indicator because the world's most liquid pairs against Tether is Bitcoin and then Ethereum, aka the main purpose of Tether is to buy those two coins.
What is my purpose?
You pass butter.
Oh my god.
So it's why I think a potential crackdown on Tether would be short-term uber bullish for Bitcoin and Ethereum long-term. Don't know. Honestly, there's plenty of other stable coins at this point, but it's still a big one. It's still a big deal. So let's talk Ethereum. I usually don't bother looking into indicators when discussing anything else other than Bitcoin, especially Ethereum, because if for years now it dumps when Bitcoin does and it pumps when Bitcoin does, then what was the point? Unless you're an active trader, I didn't really see one. However, not looking into Ethereum nowadays, I feel would be doing it a big disservice, as it's more relevant than ever. Why? The amount of money being transferred on the network has surged so much, it very recently outstripped Bitcoin itself, a first since early 2018. And this is just Ethereum. Keep in mind, this isn't stablecoins, this is ETH. Can we get a finite supply? It's such a basic thing. Currently, there is no max supply of Ethereum tokens ever. It is currently estimated to be about a 5% inflation rate per year. That is billions of dollars of sell pressure. Yes, there's an argument to be made that that's a good economic policy because it encourages spending and it encourages development. But honestly, no, that's way too expensive. Billions, really? That seems so dumb. Problem number 2, I forgot what it was. Yes, number 2, if you're gonna have high fees, maybe at least put a fee burn into those transactions so some of the supply is getting reduced. Currently, the Ethereum miners are making off like bandits to the detriment of literally everyone else in the Ethereum ecosystem. In September of 2020, for the first time in Ethereum history, fees actually surpassed block rewards in terms of value. That isn't meant to happen. You see, as I've been saying since 2004, the Ethereum blockchain is a travesty. Very expensive to use. You know what's not expensive? My bank provided debt. Fix it, Vitaly! For this reason, even though ETH is very exciting and I actually hold more now than I ever have done before, I can't yet compare it to what Bitcoin currently provides. Moving on to DeFi. I have some pretty strong opinions about this, which may surprise some of you, as before I took my hiatus, I was talking positively about farming on Curve or Yearn, which my opinion on has not changed. Farming with Bitcoin or farming with Ethereum or stablecoins is pretty cool, still profitable to do so. However, very soon after I left, people went completely bananas. Creating all sorts of food Ponzi's, and almost everyone learned a new vernacular, namely the rug pull. It settles down from the point of view of people providing their liquidity to collect coins. It crashes with tears from the point of view of people holding those coins that are getting printed non-stop to pay the liquidity providers. Seriously, the sheer volume of coins that need to be printed non-stop to pay liquidity providers in these 50 to 100% a year yield farming regimes make major national central banks look like they're all run by Ron Paul. I would like Vitalik to take a little bit of his own advice, but he does have a point. Those Ponzi's were never gonna last. I mean, take a look at sushi. It generates income, but the income cannot outstrip inflation. You think we, of all people, would know inflation bad? No, I'm not saying anything. The editing on this is ridiculous. I get cut off every time I try and... This whole ordeal definitely marred many people's opinions on DeFi, rightfully so. But to say that the entire space has no value is categorically untrue. Here's proof. Here are some DeFi tokens that have total annualized revenue. These coins are making millions, if not tens, if not hundreds of millions of dollars per year. And that isn't through inflation. That is actually generating cash value from the tokens protocol use case. Not just as a store of value. Now, I can't tell you how much, even to someone like me, as dejected, as pessimistic as I am, when I see something like this, that's pretty cool. That is pretty cool. Even if it did take way too much time to get here. We've definitely had a blip in the total amount of money entering the DeFi space lately, but I see this continuing to grow long term. It wasn't that long ago that we were at 10 billion, and now almost 11. Let's talk about ridiculous but profitable narratives. I've been wanting to get this off my chest for a while now, actually. About 2 or 3 months ago, the narrative was, hold anything DeFi related. Amazing rewards for people that did this. Seriously amazing. Bit over a month ago, new narrative, because DeFi tokens installed. Where are we going to get our money from now? Well, Yiffy clones. Basically, Yiffy forks with small variations. Buy anything under 5 million market cap was my strategy that had YF in the name. That is how dumb it was, but man, did it work. These coins 10x at least. I'm talking YFII, YFL, YFV, YFDI, YF anything. They say that they'll add something, they'll add an exchange, they'll add a feature, blah, 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 blah. Despite feeling very conflicted about engaging in the stupidity that this was, I'm still very glad I did. I don't hold any of them anymore. I got out when the hype was high, but a new narrative has now emerged because that's no longer working. What's the new narrative now? It's not any smarter, but so far very profitable. It is deflationary DeFi farm tokens. So for example, Core. Core is the first to do it properly, where you provide liquidity and then it's locked forever. You can't ever withdraw it. Ideally, the liquidity only continues to rise. Small change, but a great idea. I tweeted about it a while ago. Core, for many days now, is the #1 most popular token on Uniswap by volume by a considerable margin, excluding Ethereum and some stablecoins. So what is it? Well, honestly, it's a Ponzi. It's very clearly an entirely useless Ponzi, yet people are going mad for it because the Ponzi-nomics are, we haven't seen anything like this quite yet. So the team claimed there will be automated strategies that will bring a use case to the token in future, but as of right now, yeah, it is what it is. We'll see. But whenever something successful hits the market, clones come. I saw this coming from a mile off. There's already a few. And I'm looking for quick flips on them. I still hold Core, but these new ones, judging by this volume, I don't see how this isn't a new narrative, even though each new iteration of a new narrative for generating money gets shorter than the rest until it's completely dead and everything's been exhausted. Now, I'm not saying this because I want you to do this. Honestly, I wish these dumb narratives did not exist and people weren't this stupid. Dollar cost averaging and stacking sats is always going to be safer. I would just feel like I wasn't being honest with you, considering I've made, it doesn't matter how much I've made, but it's been profitable and I wanted to be honest with you. Just stay safe out there. Let's talk CeDeFi. Have you guys noticed you can get 15% APY on your Bitcoin through Binance? Obviously not as secure as keeping it on your ledger. I'll get that in before the comment section does. Unless you have malware installed on your computer or you lose your private key, in which case Binance is going to be a safer option for idiots. They're able to offer things like this now because of recent DeFi innovations, which at the heart of it are just smart contracts interacting with other smart contracts. All the protocols that Ethereum has can now work synergistically. So for example, you got things like Maker, Aave, Compound, Chainlink, all together make yield-bearing strategies possible without the need of inflationary Ponzi food tokens. And this also goes into why I'm not super excited about Ethereum killers. If we were to say ETH was a club on a high street full of nightclubs, everyone is hanging out at ETH. No one wants to go to the other clubs. They just don't have the music or the drinks or the atmosphere that ETH does. It's popular, and that's what makes it expensive because of its popularity. The other clubs don't have anywhere near the amount of people or infrastructure yet. It's such a popular hangout spot that we're actually seeing Bitcoin getting moved onto the Ethereum network. And I only see that number going up, which is theoretically on a fundamental level an attack at Bitcoin's perceived value, which is its security. It reduces Bitcoin security if it's on Ethereum. But considering we are still below 1% of all Bitcoin on Ethereum, I don't think it's really that important to talk about yet. Polkadot. I'd be remiss not to mention this at least. Polkadot projects will be able to mint their own tokens in 2021. A token minting system is coming to the Polkadot blockchain ecosystem, promising to be a leaner, meaner version of Ethereum's ERC20 standard, the mechanism that launched 1,000 token sales. So if we're going to go back to the nightclub analogy, Polkadot is hiring a DJ. Good, that's an important feature. Announced Wednesday, Polymech, the token issuance and transfer framework for Polkadot, is being launched by the team behind blockchain identity protocol Kilt. The reasons for creating a community-owned tokenizing system native to Polkadot are manifold, not the least of which are the surging gas costs associated with transactions on Ethereum, said Ingo Rube, CEO of Bot Labs and project lead for Kilt Protocol. So Kilt is a very interesting ICO. They're the first major development on the Polkadot ecosystem, and they basically need to do well because Polkadot is trying to garner a reputation here. So if their DJ that they're hiring is a flop, not a good look. They have received grants, I think, from Polkadot Foundation. I'm expecting this to hopefully do well. NFTs, a very heated argument around the topic of are NFTs valuable or not? Is it the next big thing? The answer I will give you now, yes. Although it depends on its use case. So for example, you could have an NFT very easily worth nothing and another one potentially worth billions. It depends on what you use it for. It has a plethora of potential use cases. I'll give you one example. Trading card game, NFT. You can use it on an Ethereum dApp. How do you put a value on that? Depends on its use case. People are looking at NFT art because that's the easiest NFTs to make right now. But people are looking at NFT art right now as it's the simplest NFT to make. Personally, I don't see any value in it. But for the same reason, I wouldn't tell someone that they were wrong for buying a painting which I didn't like. I wouldn't argue with someone buying NFT art. At the end of the day, it's a personal preference. Am I back? Yes, I personally prefer fiat. I didn't get cut off. Okay, he's done. I've got so much to say. First